August. It's meant to be the quiet month, right? When everyone's on holiday, nothing happens. Well, not in property. There's so much happened in August, it's bonkers. But luckily, backed by popular demand, is our market update. I'm Rob B with Rob D, and you are listening to the Property Podcast Market Update.
Welcome to the Property Podcast, where every Thursday, property investors come to be informed and inspired. I can't believe it's only been a month since our last update. We have got so much to go at this week. It might be a bit of a longer one because we've got loads to cover. We'll see how we go. But we're going to be talking about prices, evictions, mortgages, insurance, taxes, the economy, and more. So keep on listening.
Now, before we get going with the market updates, we've got our own updates. First of all, we've got a YouTube video out that you might want to take advantage of. It's called Buying Your First Buy-to-Let Investment Property with a Checklist. Now, if you are a property investor already, you may dismiss this one. Don't, because what we do in this video is show you how we check out comparables on Rightmove, and we take you through all the steps. So head to our YouTube channel, Property Hub UK. Look for the latest upload. It's called Buying Your First Buy-to-Let Investment Property, and check it out. And if you haven't subscribed yet, make sure you do. And Rob, possibly more exciting than a new YouTube video, I know, hard to beat, is that we have new roles in the business. 5 new roles, but 3 of them in the marketing team.
Yes, we are hiring. So if you're interested in a job in property and you can bear the thought of working with us, then head over to propertyhub.net/jobs. You'll see all our roles on there. There might be extra ones up there by the time you're hearing this, but the marketing roles are really exciting, especially the one that we're calling community builder and content writer. That's a Manchester-based role, so you will need to be able to work from our Manchester office. But for that role, we would specifically love to hire somebody who's already a podcast listener. It might work out that way, it might not, but that is our ideal. So do go take a look at those roles. And the other great thing about these marketing roles is you don't need a marketing degree. You don't even need any marketing experience. You've just got to show during the application process that you love the subject and you've got what it takes to do the job.
This is definitely someone's dream role. All day, every day, talk about property with people who love property. That's it. Online, of course, but that is the role. And that's why it's an amazing opportunity for a podcast listener, because chances are you are already a huge property enthusiast. This gives you the chance to do it all day, every day, and surround yourself with a load of other property enthusiasts in the Property Hub team. So if that role is of interest to you or any of the others, go to propertyhub.net/jobs to start the application process. A bit of a surprise, bit of a curveball. We, at very late notice, heard from Robert Kiyosaki. If that name rings a bell, well, it probably should, because he is the author of Rich Dad, Poor Dad, one of the most iconic personal finance books ever written, and a book that has really been the catalyst for so many people to get into property investment. So Robert joined us for a very special episode that you'll be able to listen to next week. But before then, he has an event coming up that you might be interested in. Robert, great to have you on. There's a massive live stream event happening this Sunday at 8 a.m, the Global Crisis Summit. What's that about? What can people expect?
Nice talking to you guys. I'll be sharing the stage with one of my favorite teachers, Harry Dent. And Harry Dent is one of the most accurate forecasters I know, because he's called the Great Boom Ahead, which was in the 80s, and now he's calling for the Great Crash. And I've been saying the same thing for years because, as you know, markets go up and markets go down. But this one is going to be the biggest crash of all times. So we're going to be talking about what's happened, why it's happening, but more importantly, what you can do. See, what Harry says to do and what I say to do are not exactly the same. We know this crisis is coming, but what I do is different what Harry will do. So the whole point of there is you listen in and figure out what you're going to do, because this is a big crisis coming.
That's the Global Crisis Summit. You can check out all the details in the show notes. And next week, we've got a full interview with the man himself, getting into some really interesting topics that you will not want to miss. It's going to be gold.
Let's get into our market update then, Rob. There's so much to talk about. Like we've said, it's hard to know where to start. But I suppose we should start with prices, because property prices are always the big headline. That's always what the media fixates on. And they're doing something quite unexpected that wasn't really meant to be happening right now. They're going up.
They are. I remember when we were talking about the economy and the future of property prices a few months ago. And I made the comment, and it wasn't a big thing for me at the time, that by the end of the year, I wouldn't be surprised if property prices hadn't changed much. And I think I said something like, be down a couple of percent, up a couple of percent. And I remember someone on social like scoffing at the up 2% part. So whoever you are, hi. It seems that it wasn't as crazy as a few people thought I was back then. And even more recently, even as recent as last month, when we've talked about property prices and made the suggestion that this year is looking pretty positive based on the early activity that we'd seen. Again, a lot of people were looking at us, Rob, going, guys, are you sure? But it's that activity that leads to data. And then now we're starting to see the data, and there's plenty more to come through. But we're not at all shocked by these numbers right now. Now, this is the short term, and obviously the long term could be different. And we've talked about that at some length in many podcasts, and we'll talk about it again, no doubt, in future podcasts. But what is happening now, to those who are closer to the industry, isn't a shock.
No, I think maybe what we were talking about back a couple of months ago got misinterpreted, was that the timing of it, like we were talking about this year. We're not saying property prices will never go down, but we're saying it wouldn't happen this year. And part of the reasoning for that being that there is this pent-up demand that we've seen, and some of the hit to the economy won't play out until furlough ends and all that kind of thing. And that's exactly what's happening, but it is happening to a far greater extent than I expected it to be. I didn't think prices would be going up in the way they have. I didn't think transactions would be up as much as they have, or there'd be what's been referred to as a mini boom. And I think mini boom is about right, because in certain markets, it does feel a bit like boom time. You are seeing bidding wars. You're seeing people getting quite carried away. And that is absolutely not what we were told was going to happen.
Yeah, a mini boom is a great description, and it's absolutely surpassed anything that we had even predicted or said. And we seemed outliers at just saying the market might end up slightly up. But I think a mini boom is an accurate description. But why? Why is it happening? I think that's important to look at. Well, what's happening is sales are through the roof. We're obviously in touch with a lot of developers and speak to them on a regular basis, and they are smashing their sales, which actually makes home builders' share prices quite interesting at the moment, because they are still, quite low, but they're selling really strongly in the background. Their data isn't out yet. So that'll be interesting to see what happens there. But some of the developers we know have hit their targets for 2020 already. And we've had COVID. I mean, that's absolutely nuts that that's happened. The market paused for 3 or 4 months. We had a global pandemic, and the surge has been so strong since lockdown has eased that they've hit the targets for 2020. And then on a normal market level, people are being gazumped. People we know, people in our team who are buying their own investments. I'm not talking about one person anecdotally. I've heard this from a lot of people. The normal housing market is red hot as well in many areas. So what is causing it? Well, Rob, one of the causes, of course, is pent-up demand. We had that pause, and then things reconvened. So obviously all the people who wanted to do business and physically couldn't do it, obviously started buying up straight away after lockdown eased. But then the more obvious driver of the market is the stamp duty changes.
Yeah, stamp duties definitely had an impact. It's impossible to know, obviously, what would happen if the stamp duty holiday hadn't happened. Would we still be seeing all the activity that we are seeing? I think we would be seeing a lot of it. You don't know what proportion of all the activity is stamp duty related, but it's going to be a fair chunk because it puts a deadline on it. So I've got this vague theory that we coined a term for a few weeks ago. I think we called it like uncertainty fatigue or something like that, which is that everyone's just had years of holding back and not knowing what's going on, and they're just sick of it and they're going to do something anyway. So I think a large part of the population, having been through lockdown, were minded to do something anyway. But then when you have the stamp duty holiday, that puts a deadline on it. So people who are still thinking about doing that are doing it right now. So I think it has pulled some demand forward and contributed to what we're seeing in the market. So the question then is, what's going to happen when the stamp duty holiday ends? And actually before it ends, because it's running till the end of March next year. But to hit that deadline with how long conveyancing takes, you really need to have a sale agreed by the end of 2020 if you actually want to have it completing in time for that. So you could look at it and say that the first quarter of next year is going to be really slow and the property market's really going to struggle because a lot of the demand that would have been there has been pulled forward, and you're also at exactly the same time start to see the effect of furlough properly ending, which is in October. So as I now seem to be in the business of vaguely making predictions and saying things and hoping people will forget them if they're wrong, I'm going to suggest that it's not out of the realms of possibility that the stamp duty holiday will end up being extended. Because for the government at the moment, it's all a confidence game. It's all about getting the economy going again. House prices, rightly or wrongly, are a way to make people feel wealthy and make people feel that everything's good. So they'll want to keep this going, and extending that stamp duty holiday is one potential way of doing it. So if I'm right, we're going to clip the last minute and use it extensively, and if not, it will never be mentioned again.
I'm going to take the pressure off you, Rob, and actually be bolder. I will be surprised if the stamp duty holiday isn't extended, because the other big important event that's going to happen around then is Brexit. Will we have a deal or not? Well, based on the fact that we've had COVID, either going to need probably a miracle, some sort of extension, or a rubbish deal or a no deal. And that's not me being negative. I'm not blaming anyone. It's just what's likely to play out. Now, my politics predictions are pretty awful, so don't anchor too much to those on Brexit. But the fact is, something's going to happen. And you rightly pointed out furloughs ending. And if the market is starting to move, the last thing the government will want to do is put the brakes on that. You only have to look at Help to Buy, how many times that's been extended to show that they're not afraid to do something like that. That puts me in a position of I'd be surprised if it's not extended. So now, Rob, you look good if you're right, but not as silly as me if you're wrong.
I like it. Thank you for joining me. Now, stamp duty is something obvious that's happening in the market that's giving things a bit of a boost. But there's also, Rob, something not obvious that's happening. No one's talking about it, but it's probably having a far bigger effect than anyone's aware of. And that's something that seems very distant and unrelated, which is what's happening in Hong Kong.
This is almost like brilliant to be able to bring you this, because I've not seen it reported anywhere else, and certainly not extensively. But again, by speaking to developers and getting the inside track on what's happening, we're seeing a huge impact from buyers in Hong Kong. Because of all the uncertainty there, many of them have been trying to get their money out into safer assets. And many of them have chosen the UK, and particularly UK property, as those assets. I know developers that have gone over to Hong Kong in the last couple of months, and in a single weekend sold 70 units at higher prices than they were selling before they left Hong Kong. So they put prices up, and they've sold record amounts in a weekend. And that's not just one developer. There's other developers as well who've really benefited from that. Now, at the moment, that focus seems to be in city centres, but that money's spreading everywhere. Now, it'll only last so long, but that's one of the reasons why we're having this mini boom. But people, of course, quite rightly, will talk about pent-up demand and stamp duty, and yes, they are definitely having an impact. And Rob's talked about uncertainty fatigue, and that absolutely will be having an impact. But the secret one, not so much of a secret now, at least to you as a listener, that nobody's talking about is the Hong Kong money that's piling in right now. And as you said, this isn't a theory, this is something that's actually happening.
Yeah, we've seen it happening already with developer sales, and it seems like there's more to come. So just anecdotally, somebody from Hong Kong originally who's been living here for a long time emailed me recently. He said that he's got so many friends and family still in Hong Kong asking, who are either planning to come over and live in the UK or just looking at it as a place to invest. And they know that he invests in property and are asking him where the best places to invest are. And it's serious amounts of money, and it's yet more demand in a market where supply is constrained, because there hasn't really been time for developers to prepare for this in terms of building a pipeline. And in fact, their existing pipeline might have been slowed down because of lockdown. So I was talking earlier about what proportion of the mini boom do you attribute to different causes? What proportion is it to do with stamp duty versus people just getting sick of where they are? Don't know, but I think a significant slice of it over the next few months is going to be to do with Hong Kong, which is really interesting because, like we said, if you ask most people for their top 5 causes, that would not get a mention at all.
So lots of positivity around property prices, but something that's not positive right now, and probably not getting enough attention as well, are mortgages. Because getting a mortgage right now as a buy-to-let investor is a pain in the bum. It's unbelievable, some of the behaviour that's been playing out. So interest rates have plummeted, but rates, if anything, have gone up slightly. Now, that could be because some of the lenders can't access money at lower rates, but a lot of them can. It's mainly because of this demand, and they can now suddenly, because they're at capacity, make the most money possible from these situations. But they're also being ridiculously picky. Again, someone who works with us got a mortgage kicked out the other day because they said he worked for a property company. It's like, what? How's that even a reason? So it's so frustrating, Rob, because so many of us use mortgages that at the time when the market is really doing well and there's still, opportunities out there, because even though the market's doing well, there's a lot of uncertainty. Actually, accessing the market is a lot of work right now. It's a lot of hard work.
It really is. It's a lot of work. We're seeing mortgage rates go up very slightly, only by fractions of a percent, but still going up when you wouldn't necessarily expect them to be. And we're seeing criteria toughen. And some of that will be because of uncertainty. Despite the market doing well at the moment, there's still medium-term uncertainty and lenders won't want to be overexposed. But there's also this whole point of they're just too busy. And in a true property boom, there'd be time to adjust to this and they'd hire extra people and they'd be all set up to shovel money out the door as quickly as possible. But because this has kind of come out of nowhere and they're also at a time when lots of people are still working from home and trying to adjust to that, they just don't have the capacity. So they're putting rates up and removing products at high loan to values and saying no to people for random reasons just because they can't handle the business, which is an unusual situation to be in and, a really frustrating one for investors.
What's also really frustrating is the behaviour of some surveyors. The behaviour, I would actually say, is professionally disgraceful. Over the years, I've seen some crazy work by surveyors. But I think right now, COVID's had a worse effect on surveyors and their professionality than pretty much any other sector. Down valuations seem to be happening left, right and centre. Even though another surveyor will go out and look at another property identical to it, and value it at a price point that's 20% different. I mean, how does that even make sense? How can you have two surveyors go out in the same week to two identical properties and be 20% apart? And then you're seeing things like comps being used, comparables, and they're all high, which justify the valuation. And then they go, but I'm a bit unsure about the market right now, so I'm going to downvalue it. So the one person's opinion on the economy means that suddenly you need to put more money into that deal. How's that right? The comps are in, the market is up, you're not being paid for your economic view of what the market will do in the future. You're being asked to value the property today and assess its fair value today. But the reason why I'm getting a little bit ranty here is it's not just one or two that I've seen over the last few weeks, because obviously I'm exposed to hundreds of deals at any one time and see what's happening. It's happening at an alarming rate. I am curious to see, is this some sort of instruction by the lenders to say, be difficult, don't worry if you kick a few out? If that is the case, and that's speculation, I don't know that, then they should just say, listen, we're not going to lend to you right now, rather than make you go through this entire process. And if it's surveyors just deciding to be a law upon themselves, well, they need to sort their act out. That's not your job. Your job is to value the property today, not make assumptions on the property market in the future. If you want to do that, start a podcast and make loads of predictions, and hopefully some of them will come right and lots will get wrong and people can laugh at you on social media. That's what we do. But you are dealing with people's hard-earned money and life-changing investments for these people. To come out with some of these farcical valuations and justifications for down valuations just needs to stop. It won't, Rob. And maybe the odd surveyors listening to this going, well, I don't do that. And you probably don't. But unfortunately, there's a big enough group of surveyors who are acting this way that's really tarnishing your industry.
No, agreed. And I'd actually love to get a surveyor on the podcast because I think it'd be really interesting. And I'm sure there's lots about the instructions they get and the conditions that they work in and what they're trying to achieve that we don't understand that would help some of the things that we see make a lot more sense. But there have always been weird things go on with valuations. Everyone's got their bonkers valuation story. But recently there do seem to be a lot more around and a lot stranger as well. So again, not all, but some surveyors seeming to add to investors' frustrations along with those mortgage challenges we've talked about as well.
Now, Rob, we said there's plenty going on, and there is, because the eviction ban that was introduced a few months ago has now been extended. So the government are demonstrating that they are willing to extend schemes, but not all of them are going to be popular with property investors.
No, and this one people got very upset about because it really happened at the last minute. So evictions were meant to be restarting on the 24th of August, which is a Monday. And on the previous Friday, mid-afternoon, an announcement came out that actually they wouldn't be. The eviction ban was being extended for an extra month. And that's very frustrating for anyone who's waiting to evict, of course. But actually more impactful than that is that the notice period for evicting a tenant from now until at least the end of March next year has been extended to 6 months. So it'd been 2 months for basically forever. Then it got extended to 3 months as a result of coronavirus. And now it's 6 months until the end of March next year. And as we've already seen, once you put something in, it's quite hard to take it away. So who's to say that that's not going to get extended? And I can really see why landlords are getting upset about this. Because I think I've always been pretty understanding about eviction laws. Like, it shouldn't be easy to kick someone out. You should need to have really good reasons. You should give plenty of time for them to find alternatives. And a lot of the time I see landlords being what I perceive as unreasonable about the whole situation and thinking about their investment rather than thinking about the person on the other side. But it gets to a point of, well, how long are you meant to sustain an investment for without any income coming in? So I haven't done the maths, but if you add up the time that you haven't been able to evict a tenant for this year, then you add another 6 months to it. That's got to be getting on for a year. Then by the time you actually go through the process, it's going to be over a year. So how long are you expected to be able to sustain that for and pay your mortgage and everything else without getting any income if you've got a tenant who's not paying rent? So I get it. It's a difficult time, but I totally understand the frustration. And I hope over the next month, the government comes up with what sounds a bit more like a plan for sorting this out and making sure that tenants are protected, but landlords get something out of it as well. Because it seems like this has been dragging on for a long time and there doesn't really seem to be much of a plan. Well, that's my impression anyway.
Well, we've seen enough evidence over the years, Rob, that shows that there often isn't a plan. I think in the short term, there obviously needs to be a lot of sensitivity around, evictions. There will be some people who are normally, very proud and that they pay everything on time, who've been put into circumstances that are beyond their control and are struggling with their rent right now. So I understand that the short-term play on this. And although that will annoy some landlords, you have to remember that we are dealing with humans. And yes, that means it's affecting you, but there is economic pain everywhere at the moment. The extension to 6 months, though, is interesting because while you could try to understand why the governments have done it, I actually think it could backfire on a certain type of tenant profile because landlords are going to take less and less risk. If this is left as it is, and this is what we have to work with now, landlords are only going to want to let to tenants that are perceived as low risk. Why wouldn't they? It makes sense. Which means there's going to be a huge sector of society that will really struggle to be able to access the rental market because it will only get tougher. It makes sense. It's not like some crazy theory. It's just obvious that that's what will play out. So the government really needs to think this through and find something that works for both sides. Because at the moment, I think actually, rather than helping one side in particular and hurting another, I think ultimately it could hurt both parties, which is, I'm sure, not the intention. So a super sensitive subject. And it sounds like with some good intentions in there somewhere, but it doesn't seem that well thought out.
No, and the knock-on effect of this is rent guarantee insurance, as you would expect, is getting a lot more expensive, or in many cases, just stopping being offered completely. This doesn't do the reputation of the insurance sector any favours. There's always this perception that you get insurance and as soon as you need it, they find a reason not to pay out. But in this scenario, this is not, of course, anything that anyone would have put into their models when they're pricing this up, because you just don't expect to have this length of time when you can't get a possession if there's no rent coming in. So I've heard about some policies that are already in place that should be paying out now that aren't, because they're saying that there's a condition in there that you have to be able to legally get possession. And at the moment, you can't because there's an eviction ban. So they're using that to not pay out. That's not great. There are lots of insurers who are now not offering new rent guarantee insurance because of that same uncertainty. And for those that are still offering it, the premiums are going absolutely through the roof. So I've seen lots of examples of the cost of renewal policies more than doubling because, again, the risk has got that much higher. So for some landlords, it's still going to be worth it, but it's a much more difficult decision now to make than it was before. So Rob, that just plays into what you were saying a minute ago about investors not wanting to take any risks if they don't have to.
Something else to bring to your attention are potential changes to capital gains tax. Now, Rob, there's not too much to say right now other than the government's looking at capital gains taxes and they've started a consultation to review it, which normally means they're going to change things and they're not going to be popular. A bit of a cynic, but that's what normally happens, right?
Well, I can't remember them ever reviewing taxes and going, you know what, I think we're just charging a bit too much here. That's never happened.
Let's help you out. Let's cut it.
Yeah. So I think it's unlikely that's what's going to happen. So if they're reviewing CGT, I think that tells us it's only going in one direction. So all that's happened is that the Chancellor has instructed the Treasury to review it. And I think normally those reviews take at least 6 months. So we're probably not going to see anything happening particularly soon, but something to be aware of. And everyone got very het up about this a couple of weeks ago when it first got announced. I could probably do quite a good rant about CGT, and I think I've got some fairly unpopular opinions on it, but we're running pretty long, so I'll save that for another episode.
Oh, Rob, I can't wait to get into that because I've got some views on capital gains tax as well. So let's park that for another episode because, one, nothing has changed yet. But as soon as it changes, I reckon we could probably dedicate a whole episode to it.
Absolutely.
Here's something else worth bringing to your attention is the changes to the planning laws, which are going to come into effect in September. The headline of this is that the changes will mean that more commercial properties, particularly in high street town centres, will be converted into accommodation for people to live in. Planning applications are no longer required to demolish and rebuild unused buildings. Now, there's a fair bit to cover here because it also applies to your own home as well and what you can and can't do. And for the developers who are listening, and there's lots of them, whether you're doing refurbs or full-on property developments, there's a lot that's happened. And to do this justice, we'll cover it on a podcast in the near future to let you know exactly what's happened, what's changed, and what does it mean. But if you simply can't wait for that, then do a bit of Googling and you can get into all the detail. There is a lot of it, hence why we want to do a podcast dedicated to it. But again, that will impact the property market. The government hopes that it will really drive construction and building projects and ultimately more new homes. And you know what? It's got a chance. So we'll cover that in a few weeks' time.
So absolutely loads going on in the property market. I can't believe all this has happened in the last month. But normally, Rob, on these market updates, we talk a lot about the economy. That's barely got a mention so far. So have you got anything you can throw in on that subject?
A little bit. It is crazy how we've not even talked about it at all yet. And obviously, the economy is what drives everything in property. But just a couple of observations, really. The first is just a chat I had with the owner of a carpet shop. And when I meet any business owner at the moment, I always want to see how they're getting on. You know, I'm interested and obviously care, living it myself, so I just want to see how it's impacting others. And he said he's booming, which was great to hear. He said what was missed through the months of shutdown is being made up for now, and it looks like the year will end up being quite a good year. And he made the obvious but really important point that while industries like his own, people selling carpets, can bounce back and make up for what they've lost earlier in the year, you've got those other industries like hairdressers or restaurants that can't really get back what they've lost because people can't go and get the haircut they didn't take 2 months ago. People won't go and have that meal out that they didn't have 2 months ago. It physically can't happen. So there are some industries that are going to bounce back and come back quite strongly, it seems, and recover quite quickly if things carry on as they are. But there are others that are really suffering right now, and understandably so. So I think it's really important that we help them, which leads me on very nicely to the government scheme, which is the Eat Out to Help Out, which is the scheme that on Monday, Tuesdays and Wednesdays, you can eat out at participating restaurants for half price effectively. There are caps and limits and it does include alcohol and blah, blah, blah. But ultimately, you can eat out for a lot less, which is great because I like eating out. I just want to kind of end this episode on being aware of the media. We've talked about this so often, but just be careful of your inputs. Now, a respected input is the BBC. Marvellous institution, well respected, but not all journalists are created equal. And I've seen two, I would say, like shocking headlines really poo-pooing this scheme. So the first was just before the scheme started, and the headline was something around, this scheme could do more damage than good. When I read the article, they quoted one restaurant owner who said that, I'm sure what will happen is my Saturday night take-ins will be down, and probably not enough will happen on the Monday, Tuesday and Wednesday to deal with that reduction. So overall, I'll be at a net loss. Not that this person had lived through it, that was just their assumption. And you know what? Been a negative year, can understand why they may have that negative framing on life right now. But the BBC took this one conversation, turned it into an article and a headline, and it was on the front page of the BBC News website. Now, if you just read the headline, you would think all restaurateurs were against the Eat Out to Help Out scheme. But from the restaurateurs I've spoken to, they're loving it. And it's been a great success. And people have not only been eating out, but also got used to the concept of eating out again, which is great because people were scared and didn't want to leave their homes. And now more and more people are eating out. Locally where I live, restaurants are fully booked on Wednesdays. You can't get in. Like, it's crazy. But they're still doing a good trade at the weekends as well. Which leads me to a second story, as this has all kicked off and been really successful from an economic point of view, and a great scheme that's really boosted British business, is that the BBC published a second article where a couple of restaurateurs were complaining in Cornwall that it'd been too busy, and actually they were getting bad online reviews because they'd taken too much custom, they couldn't serve them properly enough, so their reviews had been hit and they were really cross about it. So wait there, let me get this straight. You're complaining that you've done too much business and that you didn't say no at any point and your reviews have been slammed. I mean, it's bonkers. But yeah, the BBC framed this scheme that has been an incredible success for British business as a scheme that's done poorly or that's caused damage. What is going on, Rob? It just maddens me.
You do need to be aware of it, but you actually see this being mindful. You see journalists doing this, like you'll see on Twitter, they'll often like put out a tweet saying, I'm looking for someone who's been screwed over by so-and-so, or I'm looking for someone who's had a negative experience of this. And I get it. You need to personify your stories to make them have more impact. And so if something actually bad is happening, you need to find an example of that so you can throw in a real story and then people pay attention to it. So I get why they do it, but you can really see how that gets overextended to just finding one person who's got a grudge about something and then turning it into a story. And I love the one where it's about something that hadn't even happened yet, but the guy thought that something might happen. And so that gets turned into a story that gives you the impression that that's what is happening or will happen. It's just bonkers. And that's why like anecdotal stuff, like conversations you have with people, it gets looked down on because it's not representative and it's only a small sample. But I really like stuff like that. I put quite a lot of weight on those conversations that I have and those little data points because it's not been filtered through anyone else. And to pick up on a theme of this episode, we're talking about schemes being extended, maybe extended, things like that. I really hope Eat Out to Help Out gets extended because a couple of restaurant owners that I've spoken to in the course of bravely helping out, as I've been helping out a lot this month. They've been saying how great it is, but a lot of them also missed a week at the start because it was so much effort to set up their systems to actually be able to deal with it. So going through all that effort of setting it up for only a month doesn't seem like that much. So if they did decide to extend that one by an extra month, I'm sure the BBC would find some complaints, but they wouldn't be finding them from me.
No, my only complaint is I'm going to need some help out in the gym if it carries on for too long. I'm loving it. And hopefully you're loving the market updates as well. We love doing these, and by the downloads, it seems that you are too. So I'm glad that we are doing this, and it's a new concept for us, but we're going to carry on for at least the rest of the year. And make sure you listen next month. I'm sure Rob will have plenty of property stuff to talk about as well, but we'll be getting into the economy a little bit as well because we love balancing both subjects. So we'll definitely do a bit more on the UK economy next month.
For sure. For now, though, thank you for listening. Really glad you could join us and let us know what you think. We love to hear from you. You can get on the Property Hub forum, of course, at propertyhub.net/forum, and we're on all the socials at Property Hub UK. We'd love to hear your experience of how you're finding the property market at the moment. We'll be back on Tuesday with Ask Rob and Rob. And as we mentioned earlier, to tide you over till then, we've got a new YouTube video out and loads going on our channel. So head over to YouTube and search Property Hub UK. So enjoy all of that and we'll see you soon. Bye-bye.
Bye-bye.